Hi, welcome to the Crypto Republic. If you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video and subscribe. Hello, XRP Army, and welcome back. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Something about the XRP Clarity Act story is not adding up. While most of the market is distracted by price swings, lawsuits, and social media narratives, institutions appear to be moving in a completely different direction behind the scenes. Governments are debating digital assets frameworks. Banks are testing blockchain infrastructure. And Ripple keeps expanding deeper into the financial system during one of the most uncertain macro environments in decades. So the real question is, what are they preparing for that the average investor is still not seeing yet? Hope you're all having a great day out there. Welcome back, Wolfpack. Today, we need to slow everything down because there's a massive disconnect happening in the market right now. On one side, you have fear, volatility, nonstop emotional reactions, and social media noise. But on the other side, institutions continue building infrastructure quietly in the background. And that's where the story starts getting very interesting. Because the deeper you look into the Clarity Act conversation, the more you realize this may not just be about crypto regulation. It could be about preparing the financial system for the next phase of digital asset integration. Now, this is what most people are missing. Markets are focused on short-term price action. Institutions appear focused on long-term infrastructure. And those are two very different things. Ripple continues expanding institutional relationships. Regulators continue discussing market structure. Banks continue exploring tokenization and blockchain settlement systems. Yet somehow the public narrative around XRP still sounds stuck in 2021. So in this video, we're going to connect all the dots step by step. The macro picture, the Clarity Act, institutional positioning, and why some analysts believe the market may be underestimating what is quietly developing behind the scenes right now. Now let's slow everything down because there's a massive amount of confusion spreading across the crypto space right now. Every day you see new narratives, new rumors, new emotional reactions. One post says XRP is finished. Another says institutions are secretly accumulating. Another claims regulations are about to unlock everything overnight, blah, 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 blah. But the truth is usually more complicated than the headlines. And this is where things start to get interesting. Because when you zoom out and stop looking at crypto like a casino market for a second, you begin to notice a much larger structural transformation happening underneath the surface. The conversation on XRP is no longer just about retail speculation. It's about increasing tied to regulation, institutional infrastructure, liquidity systems, tokenization, cross-border settlement, and the monetization of financial rails. Let this sink in, ladies and gentlemen. This is a completely different conversation than what most of the market is focused on day to day. Now, this is what most people are missing. The Clarity Act is not important simply because it may classify crypto assets differently. It matters because it represents a possible bridge between the old financial system and the new digital asset economy. And historically, whenever governments begin creating legal frameworks around emerging technologies, it usually signals that those technologies are moving from experimental phase into integration phase. Well, we've seen this pattern before throughout history. One real historical example comes from the creation of the Bretton Woods system in 1944 after World War II. The global economy was unstable, fragmented, and financially exhausted. Nations needed a standardized framework for trade, liquidity, and monetary coordination. So governments came together to build a new financial architecture centered around the U.S. dollar. That moment reshaped global finance for decades because it created clarity, structure, and confidence in international markets. And while crypto is obviously very different from Bretton Woods, the principle is similar. Large financial systems do not scale in chaos. They scale through rules, coordination, and infrastructure. That is exactly why institutional investors are paying attention to legislation like the Clarity Act. Now, does that mean XRP suddenly explodes overnight? No. And this is where people need to separate emotion from structure. Short-term noise, long-term structure, we always say. Price is reacting, the system is evolving. Those are two completely different things. Right now, markets are still heavily driven by macroeconomic pressure, inflation concerns, instant rate uncertainty, geopolitical tensions, liquidity tightening. These forces impact every risk asset in the market, including crypto. Ladies and gentlemen, let that sink in, write that down. But beneath all of that volatility, something much larger appears to be happening quietly in the background. Ripple continues expanding institutional relationships. Ripple continues building payment infrastructure. Ripple continues positioning itself around compliance and regulatory alignment. And that matters because institutions do not deploy serious capital into systems they believe regulators will ultimately destroy. Think about that carefully. Banks do not spend years testing infrastructure they expect to disappear. Payment providers do not integrate systems they believe have no future. And financial institutions do not pursue blockchain partnerships simply for social media engagement. The real shift came when crypto stopped being viewed purely as a speculative retail market and started being viewed as a potential infrastructure layer for finance itself. That changes everything, ladies and gentlemen. Now, one thing that creates enormous confusion online is the way people compare projects without understanding institutional adoption cycles. A lot of retail investors compare blockchain ecosystems based on hype, speed, marketing, or community size. But institutions evaluate systems very differently. They care about compliance. They care about liquidity. They care about settlement efficiency. They care about operational risk. And most importantly, they care about regulatory clarity. This is one reason Ripple has been spent years focusing on relationships with banks, payment corridors, and enterprise financial systems, instead of purely retail narratives. And yes, many people criticize that strategy because it does not always create the explosive excitement that meme-driven markets create. But infrastructure developments rarely looks exciting in real time. The internet itself went through this exact process. Here's an analogy that helps explain the crypto market itself. Right now, crypto resembles the early railroad expansion era in the United States. During the railroad boom, thousands of investors became obsessed with speculation, individual companies, and short-term stock movements. But the true long-term transformation was not the stock market speculation itself. It was the infrastructure being built underneath the economy. Once the railroad and networks matured, it permanently transformed trade, transportation, commerce, and industrial growth. Blockchain infrastructure may be going through a similar phase today, and most people are watching the trains move up and down the tracks. Institutions may be focused on owning the tracks themselves. And this is where XRP enters a very unique position in the conversation. Ripple's focus has consistently revolved around cross-border settlement, liquidity movement, and enterprise integration, and payment infrastructure. Whether critics like it or not, that is the fundamental difference. Positioning strategy that many retail-focused crypto projects now. Does that guarantee success? Absolutely not. But what it does explain why Ripple continues attracting institutional conversations, even during periods when social media narratives become overwhelmingly negative. And this is another area where misinformation becomes dangerous, because many people assume price weakness automatically means institutional failure. But markets do not always work that way. Sometimes infrastructure adoption grows quietly while price remains volatile. Sometimes regulation progresses slowly while sentiment collapses temporarily. Sometimes the strongest structural developments happen during the most emotional, difficult market periods. History has shown this repeatedly. Another real historical example can be seen during the creation of the internet infrastructure boom in the 1990s. Most people remember the dot-com bubble collapse. What many forget is that underneath the speculative mania, the actual internet infrastructure continued expanding. Fiber networks were still being built. Servers were still being deployed. Digital communication systems were still scaling globally. So while many speculative companies disappeared, the infrastructure itself transformed the entire world economy over the following decades. That historical lesson matters today because blockchain markets may also be experiencing a separation between speculative excess and long-term infrastructure development. And this is where the Clarity Act becomes extremely important, because institutions need legal certainty before deploying significant exposure into digital assets. Without clarity, everything remains stuck in pilot programs, limited integrations, or cautious experimentation. But once frameworks become clearer, the environment changes. Compliance departments become more comfortable. Capital allocation becomes easier. Financial products become more scalable. Banks become more willing to engage. Now, this is what most people are missing. The real battle in crypto may not be about technology anymore. It may be increasingly about jurisdiction, classification, and regulation structure. Who regulates digital assets? Which assets qualify as securities? Which qualifies commodities? How banks custody digital assets legally? How do payment systems integrate blockchain settlement within compliance frameworks? Those are the questions institutions are focused on right now. Retail traders often focus on price candles. Institutions focus on legal architecture. And this is why the SEC versus CFTC discussion matters so much, because classification determines the rules of engagement. It determines who can participate. It determines what products can be launched. It determines how pension funds, asset managers, and banks interact with digital assets moving forward. Now, of course, legislation takes time. Markets often underestimate how slow structural financial transitions really are. People expect overnight transformations, but real financial integration can take years, sometimes decades. And that frustrates investors because social media conditions people to expect instant results. But financial infrastructure does not move at internet speed. It moves at institutional speed. That means testing compliance reviews, legal frameworks, operational integration, risk assessments, and long-term deployment cycles. Speculation moves fast. Financial integration moves slowly. That phase may explain the entire XRP debate better than anything else. Now let's zoom out even further, because the macro environment matters enormously here. Global economy right now is entering one of the most uncertain monetary periods in decades. Governments are dealing with massive sovereign debt burdens. Central banks are balancing inflation pressures with slow growth. Liquidity conditions remain unstable. Banking systems are under stress in multiple regions globally. And historically, periods of monetary stress often accelerate financial innovation. Not immediately, but gradually, because inefficiency becomes more expensive during unstable economic periods. Cross-border payment inefficiencies become harder to justify. Settlement delays become more problematic. Liquidity fragmentation becomes more dangerous. This is one reason tokenization and digital settlement conversations are growing globally right now. Financial institutions are actively exploring ways to modernize outdated systems. Now, that does not mean every blockchain project succeeds. Far from it. But it does suggest that broader direction of digital financial integration continues moving forward despite short-term volatility. And XRP's positioning around liquidity and settlement keeps it directly connected to the larger conversation. But here's where the story takes a very different turn. Many investors still approach XRP primarily through a retail trading mindset. They look for explosive price action tied to headlines, lawsuits, ETFs rumors, or social media narratives. Meanwhile, Ripple itself increasingly behaves more like a financial infrastructure company than a traditional crypto startup. That distinction matters because infrastructure companies think in decades, not weeks, not months, decades. And that may explain why Ripple continues emphasizing compliance partnerships, treasury system, tokenization infrastructure, and enterprise expansion rather than constantly feeding retail hype cycle. Now, does that not mean everything is perfect? There are still enormous uncertainties ahead. Regulatory frameworks remain incomplete. Global adoption remains uneven. Competition continues growing. And macroeconomic conditions could absolutely create additional volatility across crypto markets. Investors need to remain realistic about that. But realism cuts both ways. It is unrealistic to assume all blockchain infrastructure disappears. It is also unrealistic to assume adoption happens overnight. The truth likely sits somewhere in the middle. Gradual adoption, gradual integration, incremental adoption, slow institutional expansion, and periodic volatility throughout the transition. But here's another analogy that helps explain what may be happening right now. The current financial system resembles an aging highway system built decades ago for a smaller economy. Over time, traffic increases, congestion worsens, bottlenecks multiply, repairs become more expensive. Eventually, governments and corporations face a choice: continue patching the old roads endlessly or begin building new infrastructure layers underneath the economy. Blockchain systems may represent part of the new infrastructure layer, not necessarily replacing everything overnight, but gradually integrating into areas where efficiency matters. Cross-border settlement, liquidity movement, tokenized assets, real-time financial conditions, and coordination. And this is why the conversation around XRP keeps surviving despite years of volatility, lawsuits, criticisms, and skepticism. Because the underlying use case continues existing, regardless of market emotions. Now, one of the most misunderstood concepts in crypto investing is the difference between narrative cycles and structural cycles. Narrative change constantly. 1 week it's AI tokens, next week is meme coins, then gaming, then regulation fears, then ETFs, then macro panic. But structural cycles move differently. Structural cycles involve infrastructure deployment, institutional integration, legal frameworks, financial modernization. Those trends develop slowly, but can have far greater long-term impact. And many analysts believe Ripple has positioned itself around the structural side of the market rather than purely narrative-driven speculation. Again, that does not guarantee success, but it does explain why XRP discussions remain deeply connected to regulatory clarity and institutional adoption conversation. Now let's talk about volatility, because this is where emotional reactions destroy many cryptos. Now let's talk about volatility, because this is where emotional reactions destroy many investors. Crypto markets remain highly sensitive to liquidity conditions. When central banks tighten, liquidity risks assets often struggle. When uncertainty increases globally, leverage unwinds rapidly. liquidation cascades create sharp downward moves that may have little connection to long-term fundamentals. We've seen this happen repeatedly. And every time it happens, social media fills with extreme reactions: panic, euphoria, fear, overconfidence. But experienced market participants understand something important. Volatility does not necessarily equal structural failure. Sometimes volatility is simply the cost of being inside an emerging asset class during a transitional period. And crypto is absolutely still in transition. The industry is evolving from speculative frontier market into regulated financial ecosystem because old systems resist change. The transformation is messy. Regulators move cautiously, and institutions move slowly, and markets react emotionally. But beneath all the noise, infrastructure developments continue. That is the key point. And this is why many long-term observers continue focusing on adoption trends rather than daily price fluctuation. Because when you zoom out, you start seeing a larger pattern emerge. Banks exploring tokenization, governments discussing CBDCs, asset managers entering digital assets, payment providers integrating blockchain systems, treasury operations modernizing, settlement technology evolving. All these developments suggest the financial system itself is gradually adapting to digital infrastructure. And XRP, the anointed one, remains connected to the transition whether critics acknowledge it or not. Now, does that mean every expectation surrounding XRP, the anointed one, becomes reality? Of course not. Markets rarely unfold exactly the way communities expect. But something clearly does not add up in the mainstream narrative either. Because if XRP were truly irrelevant, institutions, regulators, and financial infrastructure discussions would not continue orbiting around the same core thesis year after year. Liquidity, settlement, compliance, cross-border efficiency, tokenization, infrastructure modernization. Those conversations keep returning because the underlying financial problems still exist. And this is where investors need to think critically instead of emotionally. The market sees volatility, institutions see infrastructure. That may be one of the most important mindset shifts anyone in crypto can understand right now, especially during uncertain periods like this, because uncertainty creates emotional distortion. People begin confusing temporary conditions with the permanent outcomes. But financial history shows us that transformational infrastructure shifts often look chaotic during their early phases. The internet looked chaotic. The railroad expansion looked chaotic. Global monetary structure looked chaotic. Innovation rarely unfolds in a straight line, and crypto may be going through that exact process today. So when you look at the Clarity Act, do not just see legislation. See the possibility of integration. See the possibility of institutional scaling. See the possibility of financial systems gradually connecting with blockchain infrastructure under regulated frameworks. That is the bigger picture many people may be overlooking. Now, whether XRP ultimately becomes a major pillar in that future remains uncertain. Nobody knows exactly how this market evolves over the next decade. But what is becoming increasingly difficult to ignore is that the conversation itself has shifted. This is no longer just about speculative trading. It's about financial architecture. Architecture changes slowly until suddenly everyone realizes the system around them has already transformed. So as we close this out today, remember this. Short-term fear does not automatically invalidate long-term structure. Price is reacting. The system's evolving. And right now, the financial world appears to be entering one of the most important infrastructure transitions of modern era. The question is not whether volatility will continue. It probably will. The question is whether investors are paying attention to the structural changes happening underneath the volatility itself. Because beneath all of the headlines, lawsuits, political debates, and market chaos, institutions continue rebuilding, regulators continue discussing frameworks, infrastructure continues expanding, and the global financial system continues searching for faster, more efficient ways to move value in a digital world. That search is not stopping, and that may be exactly why something about the mainstream XRP narrative still doesn't fully add up. If you enjoyed this breakdown, make sure you smash that like button, subscribe to the channel, and turn on notifications so you never miss these deep dive macro and crypto updates. And let me know in the comments below. Do you still think the market is underestimating the long-term infrastructure side of XRP and digital assets, or you do believe this is still primarily a speculative market cycle? I want to hear your thoughts. Until next time, take care. Make sure you don't get cut up like sushi and stay focused on the bigger picture, ladies and gentlemen. Hope everyone's having a happy weekend, ladies and gentlemen. A lot of things I want to discuss real fast today. There's a lot of things. I want to welcome all the new members of our Patreon, all new members of the membership channel. Today's update in Daily Financial Combat, I think, is the most important, and we've been harping on this for a very, very long time. As always, ladies and gentlemen, remember, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all of this, come and join almost 550 active traders and investors in the Crypto Republic Desk Monthly. Welcome all new members, and I hope everyone here has been taking advantage of all the ICP call-outs we've been saying, because it took off like a rocket. So it's not a thing to get FOMO'd about or to chase and get cut up like sushi, but it's something to pay attention to. Like I always say, ladies and gentlemen, the ones that we like very much: ICP, XRP, HBAR. To us, those are only three cryptos that matter. I'm not here to have a philosophical debate about this, because we will allow our bank accounts and trading accounts in the future to do discussions for us. Again, we don't make viral videos here. We make content that real people are discussing. We're not talking about things that are not grounded in any form of reality. This is how we see it. And as a financial mercenary, I only care about one thing: my bank account growing, and the bank accounts and trading accounts of my benefactors and the people that attain us any capacity to grow. Again, as the Remora, we eat the sushi. A lot of people getting cut up like sushi. But ladies and gentlemen, Hong Kong is preparing to revive gold futures trading as mainland China's growing appetite for bullion reshapes Asian precious metals markets. So when you look at this, it's strengthening the city's ambition to further reinforce it as a major regional hub for the gold markets, every aspect of the gold market. So now what's happening, Hong Kong is going to link their futures exchange to their physical exchange. It's very similar to how the LBMA is connected to the COMEX. This is very important. Again, so you've got Hong Kong physical exchange connected to Shanghai Gold Exchange. So you can see that metals are going to go back and forth there. They got a futures international face on it. And again, ladies and gentlemen, this is only going to increase the insatiable appetite right now for gold around the world. So now you can hold the gold without having to sell it. You can borrow against it. You never have to sell this. This is very important. So your gold is going to be treated very similar to a U.S. Treasury. You have projects in Asia that are going to try to use the gold for financing, very similar to how the Treasury is used. I told you that whenever we develop concessions overseas, whether that's Malaysia, Indonesia, Southeast Asia, all the way abroad, we always use the U.S. Treasury as collateral for financing. Now people are going to try to use gold. And to me, that's a very exciting development, because the world is changing. I've been harping on this for a very long time about the east side and the west side. You had the unit, BRICS, West debt systems. Why I said Ripple's move into the treasury market was magnificent. Why I've been harping on things that to me make sense. Again, I can see where the world is going. You got to understand something. I don't think the conflict overseas in the Middle East is going to end. I just don't think they want it to be a kinetic showdown what it was. I just think it's going to be on this. Right now, there's news that Iran is dumping oil into the ocean. Does that make sense? I don't know. The only thing that makes sense to me is the patterns of chaos that we're following right now. Why that makes sense to me is because the world is changing. Everything about this world is changing right now. So you have a couple options. You can sit here and be afraid of it, or you can capitalize off of what's happening right now through the different financial instruments that are available for people to take advantage of. This is not financial advice in any way. This is just my opinion to anyone that attains any capacity, because the world is changing. That's what it is. And let me tell you this, and I think about this every day. Where we'll be by 2031. 2031. I think a lot of things are different by 2031. If you want to come and join us, do come and join the Crypto Republic Desk Monthly. Ladies and gentlemen, this change in the way that gold is going to be viewed in Asia that we're following is the biggest thing right now in finance. Is the biggest assault on the U.S. Treasury, the dollar global hegemon. The world is changing right now. This is when the greatest opportunities to make generational wealth, life-changing wealth presents themselves. This is Operation 2031 as far as we're concerned. Operation 2031 is a road to financial freedom. Everyone who wants to join us on our road to financial freedom, please do come and sign up at the Crypto Republic Desk monthly inside of our Patreon and see how we're going to make it to 2031 and take advantage of all the chaos that's happening. If you're tired of just watching these crazy headlines and you want to learn how to take advantage of all these headlines so that by 2031 you can have a different financial outlook and you've taken your own destiny, do come and join us, because these one-time-in-a-life system and abnormalities are going to create financial freedom for the people who take advantage of them. Again, this content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves that it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise while XRP continues developing behind the scenes and building momentum in the broad digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. I'll see you on the front lines.